Nigerian Exchange Limited. I welcome you all to the NGX Retail Investor Webinar tagged Increasing Retail Participation Through Digitalization. We are truly pleased to host this event in collaboration with Bamboo and Africa Prudential PLC, and we believe that the webinar will be of immense value to you all. Retail participation in the capital markets has continued to soar across the globe over the years. This increase has been attributed to various factors, which include but not limited to the advent of global COVID-19 pandemic, technological advancements, and digital innovations. In its 2021 report titled The Rise of Newly Empowered Retail Investors, Deloitte, the US highlighted that roughly 6 million Americans downloaded a trading app in January 2021 alone. And retail brokerages witnessed record high average daily volumes for equity and option trades. The increase in retail participation was also seen in India's stock market as active investors' accounts increased by a record 10.4 million new participants in post-pandemic 2020. As part of the efforts to increase retail participation in Nigeria, the Nigerian Exchange Limited has introduced several financial products backed by technology to deepen the Nigerian capital markets. In March 2017, the Nigerian Exchange Limited, in collaboration with the Debt Management Office, launched the MTN Savings Bond, which was targeted at retail investors to help enhance the savings culture among Nigerians while providing all citizens, irrespective of income level, an opportunity to contribute to national development. In 2029, the exchange launched X Mobile in its beta state, a dynamic and user-friendly mobile app designed to enhance investors' participation in the Nigerian capital markets. This enhanced version of X Mobile was released on September 1st, 2021, and can be accessed on Google Play Store and Apple iOS Store. X Mobile provides market participants, especially retail investors, with convenient, faster, and real-time access to information about NGX, its listed securities, and trading license holders. The Nigerian Exchange is keen on collaborating with organizations with proven and reliable technological solutions in order to adapt to digital trends and technologies, as well as innovate with new business models and products. An example of this innovation was experienced in December 2021, when the exchange facilitated the public offer for sale of 575 million shares held in MTN Nigeria by MTN Group to investors, particularly retail investors, through NGX primary offer app. The offer was priced at 169 per share and was oversubscribed by about 140%. More than 89% of retail offer subscribers applied through the primary offer platform, and 938 new CSCS accounts were opened by first-time investors. This stride clearly shows the impact of digital transformation, allowing seamless and reliable market access for all categories of investors, including institutional and retail investors within and outside the country. The importance of digitalization in capital markets to retail investors cannot be overemphasized, as it will lead to increase in efficiency and improvement in financial literacy, awareness of the market and its products. The availability of various digital platforms, trading apps, and portals would provide retail investors access to the market and convenience to execute trades themselves. Digitalization also serves as a potent tool in bridging the knowledge gap that has plagued the Nigerian capital markets. The Nigerian Exchange will continue to leverage technology and collaborate with key stakeholders to increase retail participation in Nigerian capital markets. Today, investors are able to execute their trades digitally on the exchange trading engine through the fixed protocol, provided to the trading license holders. This webinar essentially seeks to create awareness about the digital platforms available for investors to trade on the Nigerian exchange through its trading license holders. We remain committed to fostering the growth of the Nigerian capital markets through increased investor participation. I would like to conclude by thanking the management of Bamboo and Africa Prudential PLC for collaborating with us to make this webinar a reality. I'd like to welcome you once again and wish you a pleasant learning experience from this webinar. Thank you all for listening. Thank you. Back to you, Loretta.
Thank you very much, Mr. Chemeka, for the welcome address. Mr. Jude Chemeka is the Divisional Head, Capital Markets Nigerian Exchange Limited. We will now listen to the first presentation by the Chief Operating Officer, Bamboo Invest. She'll be speaking on the topic, Understanding Millennials in the Capital Markets. Good afternoon, Ms. Yamo. We're pleased to have you here.
Hi, everyone. Good afternoon. Can everyone hear me clearly, Loretta?
Yes, we can hear you clearly. Good afternoon.
Can you hear me clearly? Okay, fantastic. No, my internet has been acting a bit odd all day, so I wanted to make sure.
Hello, Yamo, are you there? It seems there's a lag. Hello? So we'd have to wait a bit. Hello, Yamo.
Hi, Amo.
Hello?
Can you hear us?
Hi, yes, I can. I'm so sorry. My internet has been acting up all day, but hopefully this works now. I have like 3 spots.
Sorry about that. So you could go on with your presentation now.
Okay, I'm going to share my screen so you get the whole. Um, Great. I'm just sharing my screen. Just
Apologies for the delay. The screen, the demo screen presentation will come up in a minute. Apologies for the delay once more.
Great. Hi, everyone. Sorry this has been a bit hectic, but great. Can everyone now see my screen as I walk us through this? Okay, great. Hi, everyone. Good afternoon. I guess I'll start by saying sorry that this took, a while to get together. Great. Okay. Hi guys, so sorry. So fingers crossed, third time or fourth time is the charm. But hi everyone, I'm Yamo. I am Bamboo's co-founder and chief operating officer. And thank you very much to NGX Group for having me. And thank you all for joining and putting up with the past 5 or so minutes. I'll run through this. Hopefully you'll find it interesting and entertaining. And hopefully we have some time for questions right at the, we have some time for questions at the end after the other speaker goes. I'm going to be talking about understanding millennials in the capital markets. At Bamboo, we're a digital platform that gives access to the US stock market. And I've seen as the US stock market is the most active stock market in the world, and has seen like retail, even as the whole world has seen retail investor participation soar. We believe that the US stock market does have a lot of learnings for us as we look at ways to increase retail participation in the Nigerian capital market. Markets. And for us at Bamboo, that's also something that's important for us, as it's something that we're looking to add on to our offerings. So I'll start about talking around who the retail investor is, why does there seem to be some level of inertia in looking at, it seems to be some level of inertia for the retail investor in the market. The Nigerian millennial generation has grown up without having an interest in the financial markets. Studies and research from talking to our investors show that a lot of inertia started from the capital market downturn in 2007/2008. So when you talk about millennials, most people tend to think of young people. You think of like 28, maybe 30-year-old, but the average millennials now go from people who are 26-year-olds to older millennials who are, closer to 40-year-olds. So if we think about where those people were in 2007/2008, you see that for them, the older millennials had probably just started investing, started putting their money in the capital markets. And for younger millennials, you see them, they watch their family or they listen to stories from adults talking about losing money in the stock market. So the knock-on effect of that is that interest in the capital markets dwindled. if it's my first time investing, I'm just new, I just started earning some money, and someone told me to buy stock at the time, I went and bought stock and I lost money. Even after that rebound happens, you're less likely to go and buy stock again. You're more likely to say, stock market's not for me, I've lost a lot of money. And for the younger millennials who they're listening to their parents, they're listening to, older people who had been investing around them. And for them, when they spoke about stock, when they spoke about investing, they spoke about it as somewhere where they lost money. So interest generally dwindles. It's people we're talking about it less. It has taught us that the capital markets are the best way to grow money in the long term. It's the best way to earn returns, it's the best way to grow your wealth. And so the danger here and what seems to have happened is that there's a whole generation of people who have grown up without understanding the best way to build, financially stable household. And so let's talk around, who are the millennial investors? What type of people are we saying that we're trying to increase participation for? A large number of us are digital natives. So that means that we're comfortable using our phones. We're comfortable with web applications in general. A number of us have high risk appetites. So, we're happy to take more risk to earn more returns. And you see that when you talk to people and see the various things that people are investing in and looking at. But you also find that, a lot of millennial investors don't enjoy friction. So we don't want to have to go to, let's say, somewhere 2 hours away, an hour away, and fill out a lot of forms in general. And on the flip side, again, I put, that some of us only tolerate moderate levels of risk. The reason I put those two things on the right side is to show that we're the same as investors, in general. We're the same as, the older generation of investors in general, which is some people with high risk appetites, some with only moderate levels of risk appetite. But some differences, stuff on the left are that we're digital native, we're comfortable with, with web applications, with phone applications, and friction is a bigger issue for us, and so like I said, we're not that different from investors from older generations. In general, everyone who is investing is on a quest for yield. Everyone is trying to make money, and the amount of risk people are willing to take is to make money. So for millennial investors, even though our interest or the tools, our investment thesis may differ, we want to grow our money like every investor in every generation. And I think that's important for everyone to always remember, is that that's the essential goal for all of us. So how do we make it obvious to younger people? How do we make it obvious to millennials that the capital markets are a place that they can grow their money and they can put their money and they can see real returns? So we did some research at Bamboo to look at what are, the type of companies that millennial investors are interested in and what a lot of people buy. We found that one is that most of the millennials on Bamboo are buying companies with great fundamentals and compelling narratives. So yes, and the US stock market example are companies like Tesla and Apple. And so yes, we're interested in companies that have good fundamentals, so that are making money, earning profits, etc. But we're also interested in companies that have, an exciting story, that have it could be, Tesla, there's a lot of like a cult following around Elon Musk and all the things he's doing. Millennial investors are very, very interested in companies that is a story that they can identify with, a story that's interesting, and actually buy into the idea of companies' growth over the long term. So they're actually looking at how does this company grow and is it going to be interesting? And we found that when you ask younger investors stuff like, oh, why did you buy these companies? They're more likely to tell you, oh, I believe it's the future. I believe that there's a lot that's going to do in the future, or I really like the CEO, I like the product, etc. The second thing is that a lot of millennials like to invest in companies that they interact with. So we see companies like Facebook, Google. We saw the rise of companies like Zoom during COVID. And that's simply because people are buying companies they know. If you're looking at a list of hundreds of thousands of stock, most people would gravitate towards companies that they know and start their research from there in general. And that's companies you interact with, companies whose products that you like, companies whose products companies whose products you use in general. The third thing also feeds into, the other two things I said, which is companies that make consumers rethink their behavior. So companies like Amazon that are increasing our ability to shop online, companies like Netflix that are, we're all streaming. Yeah, we'll say companies like Zoom as well. And the reason that's important again is because millennial investors are seem to always be thinking around what does will this company be important in the future? And an easy way for you to answer that question is to consider whether it is a company that is norm in the future, because that's a lot of people investing in companies building the next set of that basically means like a company like Nvidia builds most of the chip creator. It's odds are you've used thinking around about companies in the long term. They're investing in companies, to summarize, companies that they believe in, and when they buy into the stories of these companies and they use the company and they love the company, they start thinking about, can this company make money in the future? And investing, and also long-term investing behavior from our millennial clients based on Bamboo, which has also been very interesting. And even with more short-term investors, we've seen a bias again towards these sorts of companies that they interact with, companies they know in general, or companies that they hear about, which brings me to the main, the main point of this session, which is how can we increase millennial participation in the capital markets? I think the first thing is good digital and remove friction. I know that this is something that, NGX and a lot of the players in the Nigerian markets are already, making great strides and already making great improvements in, but we've seen that this seems to be the biggest feedback we get when we do polls and we do surveys around how do we increase more participation, and we see it's good digital and remove friction. I mean, even for us at Bamboo, there's a total mobile based app. We know that any little thing we do that helps remove friction, so take a step from 3 steps to 1 step, greatly improves people's use of the product in general. So most people don't want to have to fill countless and countless forms, unless it's absolutely necessary. So I think for us, we need to spend some time thinking about which parts of our processes are just long. Are there parts of our processes that we could cut down? So for example, if I've already collected certain information for one product, do I need to ask someone to fill this form again to fill for the product for a different product? Or, are there ways or possibilities where we can get this information and just ask users to verify it? Or, let them fill the form online, for example, so that when they get to the office or when they're submitting it, they just have to sign, for example. So it's just a lot of different ways, but I think removing friction is important. And, a good way for that is also for us internally, what we try and do at Bamboo is actually go through the entire process ourselves, or ask other members of the team to go through the process and ask yourself, what part of that process seemed long? Which parts of the process could you shorten? Which parts of the process could you make easier for the client, for the client or for the end user? And then the next thing is encourage listing of companies with compelling narratives. I mean, I think we saw with MTN and how large the participation in that was. When people are interested in a company, when people are excited about a company, the work you have to do to encourage them to the company is a lot less in general. So it's thinking around how do we encourage exciting companies to come and list on Nigerian stock exchange, Or how do we also make the companies that are already on the Nigerian capital, make them seem more compelling to users, more compelling to investors? Are there interesting stories we can tell? Can we talk a lot more about the product that the company is building? Can we, when things are happening around the company, how do we share that information? How do we build a narrative around the company so that people also feel invested in the company, and so that people all someone isn't on mute, sorry, but anyway, and also thinking about, you see how excited the Nigerians are and people are generally when even startups announce fundraising. We see stories with that and Flutterwave, and people get super excited fundraising news and fundraising rounds are announced. How do we get that type of excitement in the Nigerian capital market space? I think once we also have that, that's a great way to increase millennial participation in the capital market. And finally, ease of access to information. For example, in the US, they find so much news, so much information about news, about the stock exchange, and anyone can find this information. It's not industry insider, or people with domain expertise. So how do we increase ease of access to information? The key reason we found ease of access to information is important is because it helps people feel more comfortable investing in the capital markets, helps people feel more comfortable investing. And the more comfortable people are, the more they participate, the more they talk about it in general. So how do we increase this? How do we encourage more people to also write about companies from the point of view of from the point of view of investing? So for example, if I did a random Google search for which companies to invest in US stock markets today, you'll see hundreds and hundreds of articles will show up. How do we also get that type of engagement in Nigerian capital markets? When something exciting happens, let's say stock goes up by a certain percentage every day, how do we encourage more people to write about that, to write more news? On, when there are earnings reports coming out, how do we make access to information easier for everyone? And how do we also get people to actually find this information, like I mentioned? So those are the three things from our research and our speaking that we find. It's good digital, remove friction, make processes way easier, help people become more interested in the companies that are listed, and also make it easier for them to access information. And I believe if we're able to hack these three things, we'll see even more increased participation than we've already seen in Nigerian capital markets. Yes, thank you very much. I think that's the last bit. I just wanted to confirm whether we're doing questions now or after.
So questions will come after the second presentation by Mr. David. Yeah.
Okay.
Thank you very
fantastic.
much.
Thank you.
Thank you very much for that very insightful presentation. We've just listened to a presentation from the Chief Operating Officer, Bamboo Invest. I reckon at this point we'll have questions for her. Please share all the questions you may have using the Q&A feature on your screen, and we'll hold them for the appropriate Q&A session. So next is a presentation from the Chief Technology Officer, Africa Prudential, Mr. David Ogunshola. He'll be speaking on the topic, the journey into digitalization. Good afternoon, Mr. David. We're pleased to have you here.
Yes, good afternoon, Loretta. Nice to be here. All right, so I'll just share my screen and jump into it. All right, good afternoon, everyone. I'll just be spending the next 15 to 20 minutes just to discuss the journey into digitization. At the beginning of this, I just thought of the best approach to discuss the scope, the opportunities, and innovation. And I think what jumped at me was a speech from the Vice President of Nigeria, His Excellency, Professor Yemi Osinbajo, addressing the NGX November 30th last year. And some quotes from him captures the whole essence of the journey. And I would just do well to speak to some of them. He had mentioned that every smart investor must be looking now at how to be part of the miracle of the Nigerian unicorns. About 5 indigenous companies have moved into that category, becoming billion-dollar companies since 2015. That addresses the time and the opportunity that is available in the environment. He has also made some comments around the African Free Trade Zone area, which expands the geography in which we can do business. He has also talked about the huge outlets that the revolution of the telco business in the country has afforded us, giving people the access. And the access is really just the bearer, the channel, and the customer. And also how our new crop of investors have used these mobile and smartphones to be able to drive adoption and bring in solutions very close by. And that captures innovation. With this statement, it just captures almost everything that I intend to discuss today. So I'm just going to quickly run through the blocks for digital transformation, which is what do we need to do while we are trying to run through this journey for transformation. And there are just 6 blocks that I will just talk about. Then I'll just then again relate to some examples and how as startups, as businesses, how we can reimagine, re-engineer what it is that we do and be able to ensure that we drive this adoption, especially in the capital market. So first, I'll talk about the customer journey, decision journey. It is very, very important that you must understand the customer, who you are targeting. I think Yamo earlier spoke about the personas that you need to develop the products for. And for this, you need to very deliberately ensure that there's deep analysis and ethnographic research, so to speak, into the customer or who you want to serve, just the same way Google will address us in the office and Amazon will target us at home. And if you look at those simple statements, you'll find out that those products are tailored almost on that line to those customers, whether it's an enterprise customer or a customer at home. The organization also has to reflect this digital transformation that we're talking about. And what that means is that there has to be that agility, there has to be that collaborative processes in within that supports those transformations that we are trying to drive. Data analytics is very important because that unearths patterns that we didn't know before. You could find different models that would suffice for that we have made before. So I give an example. So before now, everyone would say, I can't give a loan except I run through your credit history or I get something from the credit bureau to be able to validate that I can do business with you. But with data analytics, you'll find out that taking an example of telco, if you run a model that I think was done in Kenya for microloans, where you could check the location, the movement daily of the person, how many number of the regularity of calls to certain individuals, you can almost predict almost to an efficiency of an accuracy rather of about 94% of how you can predict that this person can pay a loan. So data analytics opens a new frontier to show different patterns embedded in our lifestyles and the way we do things that we did not know existed before. And for strategy and innovation, specifically I'd use the example of Amazon and Google, there has to be the focus, the laser focus and deliberateness, for lack of a better word, and the experimentation, the whole fail early, fail fast, so that you learn and you move on. And just like the reorganization bit, the process automation has to be there. The back office cannot be in discordance with what you are building and showing the customer in the front end. The back office needs to be automated so that things can move fast, because when you try to offer the customer convenience, you need to ensure that behind you also build the capability to do that. And of course, technology, of which many of all these things sit on. Use technology, emerging technology, AI, we talked about data analytics and BI, and the marvels that exist in big data. Okay, so just quickly touching base on the top risks and opportunities that we have in our segment. There's a lot of industry consolidation because of shrinkages, inability to meet client demand, especially because our clients are now very demanding and they know exactly what they want. Everyone wants customized solution. The market is changing. The 4 Ps of marketing, so to speak, which is price, the product, promotion, and place, is now getting replaced by privacy, permission, performance, personalization, and things like that. There's trust that is required, especially from the customer point of view. Everybody wants to be assured that the solution they are giving protects you, protects your identity, protects your money, protects your finances, and things like that. And other microeconomic risks that is abound in our environment. The opportunities, again, are abound. Asset inflows from existing clients. As people move on the social ladder, there's more disposable income to be able to invest in the environment. New clients are coming in, people are leaving, starting the businesses, leaving school, getting jobs, new product offering is there. A lot of data management capabilities is available. Convergence of traditional and alternative spaces, especially when we talk about what is happening in the 4th industrial revolution, where there's a convergence of our physical world and the digital world. And so people start to exist in that new realm, so to speak, where you just want the convenience in your own cyberspace to be able to do activities and things like that. So basically, bringing it on, I think there are major trends that we need to look at, especially when we are talking about digital transformation. And I'll just quickly touch base on quite a number of those things, because digital transformation is very critical for our industry to shift technology, or IT as it is, from being just a business enabler to what is actually driving those businesses. And we talk of trends like the Internet of Things, where I discussed earlier, where there's a convergence of our physical world and the cyber one, cyber security to ensure the protection of our digital assets, even our physical assets as it comes, because without those security, everything that we have built can fall like a pack of cards if not properly protected. Now, I touched based on big data earlier. The amazing underlying information or patterns that exist that before now has not been exhumed, that shows our behaviors, our preferences, our innate biases, and things like that. And of course, the marketplace now is no more the traditional market, it's now social media. That's where we all congregate in our different forms, using our different devices, and also mobility, which also supports social media, and cloud, which democratizes the infrastructure, so to speak. So I'll be diving a bit deeper into those emerging technologies before I will just move on to wrap up on the presentation. So social media, very critical, because for products, to get people to use the digital technology tools that we are using, or the enablement that we are building for the products that we want, the social media is a critical bit of it, because that's where we all congregate now, like I mentioned. And there are new ways in which we start to interact, personalize the relationship, build that initial customer engagement, the customer experience that every company now needs to drive, while ensuring that you do those things within the limits of what is allowed from privacy and the laws that govern how you're able to extract and use people's information. The Internet of Things, without flogging the issue, is ensuring that those devices that are now available on the internet, we're able to ensure that people can have easy access to our services using their devices, and ensuring that we effectively manage those activities. Democratizing the infrastructure to ensure that you're able to build cheap, fast, convenient ways to roll out products. You can scale up, you can scale vertically, horizontally, in quick fix mobility to ensure that people can access goods and services on the go. People can have access to lifestyle products to be able to do quite a number of things that they need to do. And as initially talked about cybersecurity and big data. So those trends that ensure that we are driving this digital journey can be broken basically into two things. The growth driver, which is almost like capturing the new customers, and the operational improvements that supports the experiences that the customers would go through. On the growth side, we need to ensure that we are leveraging those technologies to ensure demand generation, reach and selection, which I talked about, social media, our purchasing processes, and more importantly, customer experience, because technologies are bound, people can get developers to provide solutions for us, but the experience of the customer, which is the performance, the personalization, the respect of privacy, and ensuring that you get the customer's permission to be able to use the data to do certain things, I think are very critical our digital transformation strategy. And of course, internally, we need to ensure operational improvement around our processes, around how we utilize our assets, whether they are physical assets or assets that we speak to in the cloud, and agility, the speed in which we are able to roll out those products, our software lifecycle management approaches, our product delivery methodology, whether it's Agile, Scrum, or whatever solutions that we decide to do, and ensuring that there are new business models, especially moving from probably a lot of CapEx-led processes into OpEx-led processes. So this next slide just gives an example and just talks about quite a number of all those things that we need to do and put in consideration when we are building this solution. So landing on the solutions need to have omni-channels in mind, whether it's mobile, whether it's web, whether it's other channels like USSD, depending on the geography or the focus of that product. The standard experience must be the same, whether the person is, whether the customer is accessing your service through an iPad or a smartwatch or through their phones or a browser. You need to be able to have consistent experiences. You need to ensure that those processes rely on those things that we have spoken about, the automation of those processes, the digitalization of those processes, to ensure that the customer is getting a very good value. We had spoken earlier about the mobile and AI-based solutions. In this case, especially for us in the capital market, the mobile and AI-based advisors can help in ensuring advisory on brokerage and private wealth management, the back office automation I've spoken about earlier, and the interoperability and integrations is also a key bit for us to engage, especially for new fintechs and very agile businesses that we were also spoke of earlier. And cloud-based solution, especially because it allows for easy scaling, the investment is not too steep, you can pay based on what you consume. And it is this approach that every solution provider needs to always keep in mind for every product that they are pushing out there to enable people to especially use or do business, especially in the capital market. Back in African Prudential, there are some products that we have been putting out there to ensure that we're able to make it easier for millennials and new entrants into the capital market, so to speak, to be able to come in and interact seamlessly based on all those considerations that I mentioned earlier. I'll just quickly talk about the Invent solution, which is a digital solution that helps aggregate services for capital market operators. And what that means is that we provide that platform in which you could easily participate in the capital markets without the rigors of having to run through the paperwork at your convenience. And this service is not just a B2C activity, is a B2B2C, and which means that based on the client companies or the other players in the industry, you can actually integrate and do business and provide your offerings to our shareholders in the capital markets. There's the ATMs, which in my mind I always would refer to as the office management solution, which is basically what most people will call a Zoom Plus. It provides those conferencing ability, but more importantly, aggregating your events, your meetings, your discussions, the documentations, the sharing of those informations, and you can move from your AGM live participants to e-accreditation, to streaming live, to resolution of electronic voting and all those activities. And to our core main capital market product, which we call the Green Pool, which provides the registrar operating solution and data management end-to-end for registries, where enterprise data management platforms in the capital market can help automate data processing. These solutions are built on microservices. And what that means is that each user, each corporate user can decide to use them module on modules, and they have APIs open that can integrate with existing systems and solutions and all those other fintech activities. So for all those investments around your lifestyle, congregating your assets in wallets and trying to move them around to invest, these are the solutions that you need to use. It gives you the convenience, it gives the entry into the capital market, makes that extremely easy to participate in the capital market. So layering on all those things are major considerations that are spoken about, but just calling it out clearly. You need to have a standard targeted operating module layer in which you build the approach or the plan for your digital strategy on. There's a people layer which informs how you organize your people into business, into geography, into execution, and the control of things that needs to be done. The technology layer, which stipulates the type of technology that needs to drive those applications, the controls, the report generation. The channel layers are elaborated on earlier when I spoke about the channel experience being the same across channels, whether it's web, mobile, or USSD. Depending on the geography or the devices available to the target customers and things like that. The process layer, which then defines the processes that governs the activities that run, especially in your back office, and the service layer, which is the major differentiator, which is where the customer experience and the personalization of the services that you need to give to the customers come into play. So effectively, end to end, as you drive the digital transformation process in your organization, you need to be very mindful of change management, the governance of those solutions and processes that you are putting in place, and the project delivery of those solutions. The other things are around the different capability models that needs to be considered, which I think work would look into, and very critical questions that management and product owners need to ask themselves, especially on the reason why we are embarking on this digitalization journey. How will the digital help improve performance management? Because we need to set specific goals and strategies to be able to achieve the visions and the missions of the organization. Do you have sufficient insights into exactly the users that you want to serve? How much work have you done from the research point of view? How do you keep and attract the best talent from the people side? So the approach usually would be general, from your vision and your mission, into specific things around the people, the training of the people, the effective use of the people, the processes that controls and give governance and ensure standards in the environment, and the tools, which would mean technically the emerging solutions. How do you deploy the advantages of AI, blockchain, machine learning in what we do in the environment? Thank you very much. I think we'll open for questions.
Okay, thank you very much. Thank you, Mr. David Ogunshola. Mr. David Ogunshola is the Chief Technology Officer, Africa Prudential PLC, and he has just made a presentation on the topic, the journey into digitalization. So if you have any questions for Mr. David, please send in your questions using the Q&A feature on your screen. So we'll proceed into the Q&A session now without any further ado. So we have a couple questions. Most of them are currently directed at Ms. Yamo. And I'll take them in batches of 2. I'll take the questions in batches of 2 so we don't lose track of them. So the first question is from anonymous attendee. It says, how do you manage foreign exchange conversions from Naira, considering that you are not able to access foreign exchange through the official window? Then the second question for Ms. Yamo is, please, what is the prospect of investing in Nigeria capital markets, as what you discussed more was on foreign investment? Over to you, Ms. Yamo.
Hi, good afternoon. So I tried to turn on my video, it's not working, so I will, okay, yes, there we go. I think they had blocked. Okay, fantastic. Hi, everyone, good afternoon. So to answer the first question, which I believe was around how do we manage FX conversions on, right? That was around how do we manage FX. Okay, actually, just in here, how do you manage FX conversions from Naira, considering you're unable to access FX? We have an internal treasury team that manages our deposits and withdrawal arbitrage. In addition, we also have internal dollars. So we just raised a $15 million Series A funded by Greycroft, which is like a big American investor that was also an early investor in Flutterwave, and Tiger Global. So we manage deposits and withdraw arbitrage, and where there's a shortfall, we have a relatively large internal pool of funds to go to. And the second question was around, I can't see here, but was around investing.
The prospect.
Yeah, the prospects. So for us at Bamboo, actually, the Nigerian capital markets is something that we plan to add on very, very soon onto the platform. And so that's actually one of the reasons we had actually done this research to see what, to gain some viability. And we've done a lot of asking our users in general. So a lot of the learnings I spoke about were, from the point of view of the research that we've done and the work we've seen, and a lot of work we're trying to do internally as we work to launch Nigerian capital markets on the app is ask ourselves, how do we ensure that we also have very, very active participation of our users in Nigerian capital markets? So like I mentioned earlier, telling more and more stories about Nigerian companies, getting people to be more invested in the company's listing, invested in stock price movements, and also making it easier for them to access this information. So, we're trying to do some things internally. And I think generally as capital markets operators, the more we can get people invested in, the companies interested in investing, the more participation that we will see. But yeah, Nigerian stocks will soon be available on Bamboo.
Okay, thank you very much. So a recurring question here is, how can I invest in Bamboo? So everyone, the Q&A box is filled with that question. So if you can just answer it, thank you.
So we have an app, the Bamboo app. It's available on the Apple App Store and the Google Play Store, and you can download it. So my points by reducing friction, it takes less than 5 minutes for you to get signed up, and using either your NIN or your BVN, you're able to get invested and start signing up. I saw some people ask some questions around regulation, and so I figured it would also be good to just answer that now. So in general, there was an issue last year. So the federal government didn't declare Bamboo illegal, but there was a misunderstanding last year with aspects of our operations, like I just explained, our money movements, and the CBN needed clarity on that. So we've since already provided them with all the information, and all our bank accounts have been restored, and the case has actually been dismissed in the courts. In court, so that has actually gone. And all operations on Bamboo are licensed, and all are by the US SEC and FINRA. So all the US SEC and FINRA licenses, our US broker partner is licensed by both, and every single account on Bamboo is insured up to $500,000. So every individual account is insured up to $500,000 by the US Securities and Investor Protection Council, the SIPC. So, your money is safe on Bamboo, and, you can always operate.
Okay, thank you very much for your responses. The next set of questions will be for Mr. David Ogunshola. The first question is from an anonymous attendee. It says, the digital platforms Mr. Ogunshola mentioned, how are these platforms regulated in Nigeria and in the UK? And then the second question is from Idowu Ojo. He says, on digitalization, how do tier 1 and 2 become dominant in the tech world with competition from fintech apps like Kuda? Access Bank seems to be the only ones heading towards the right direction with its Access More app, in my opinion. So that's the person's opinion. Over to you, Mr. David.
Okay, thank you very much. The first question was on the how the exchange is being regulated. So in Nigeria, we have the Security and Exchange Commission, which serves as the regulator in the year. And for all the transactions that flows, especially across the registrars and across the capital market, the Central Security Clearinghouse System, PLC, manages that and provides the regulatory oversight for all participants in the market. On the second question on tier 1 and tier 2, how do they become dominant in the tech world? For the question, I wasn't sure if Mr. Idowu Ojo is referring to tier 1 and tier 2 banks or the tier 1 or tier 2 capital. But also I'll try and answer both, especially because he gave the example of Access Bank being the only one heading towards that direction. So it's about strategy for, if you refer to the tier one banks in this case, and you find out that quite a number of these banks are actually also playing in the fintech in some form of the other. They engage in different ways, having their bank-led fintechs and agency backing model to drive financial inclusion across the organization. But we have those independent fintechs running in, and like Yamo's company, Bamboo, providing the access to be able to do the investments also outside the shores. So with competition from people like Kuda, it would just continue. It will continue. The aim of the fintechs and the aims of the traditional banks are sometimes a bit different, especially because of the access to the capital to drive those things. So it's really about the strategy and whether the business sees the value to go in one direction or the other. But I think it's just a matter of time as technology catches up, especially with blockchain and the other type of technologies coming in, where we will not require that intermediation anymore. So it's either you adapt to thrive and survive, or you would die off. So with time, you would see every of these financial organizations either morphing into a fintech, because that's exactly the end play for everyone. Thank you.
All right, thank you very much for your responses, Mr. David. The next set of questions will be directed at Yamo. This is from Omowumi Akeju. She says, kindly explain how Naira income earners can prevent cross-currency FX loss. So that's the first one. And then the second is, how do you build trust for millennials in alternative investments like crypto, commodities, etc.? This second question is from an anonymous attendee. Over to you, Yamo.
Hi. So to answer your first question around being an Naira income earner, so investing on Bamboo is actually great for Naira income earners, because when you invest, whenever you withdraw on Bamboo, we give you the prevailing market, the prevailing market exchange rate at the time. So you don't actually have to worry much about what happens to USD NGN conversion. I understand the overarching point of view. I understand like your overarching point of view, but we also ask, I think a big way that for me anyway, when I invest in Bamboo, is I tend to also invest for a long term and long periods of time. So not, not trading and trying to go in and out, i.e. deposits and withdrawing very, very quickly. So have been able to avoid a lot of loss from FX conversion that way by just investing over longer term periods and not depositing and withdrawing very, very, very quickly. But, on Bamboo, you'll always get, you'll always be able to withdraw whatever the prevailing exchange rate is at the time, regardless of whatever the exchange rate was when you deposited your money. The second question was around, sorry, go on. Okay, no. Oh, I thought you were saying something. No. The second question was around how do you build trust, I think. It was, right? Yeah, how do you build trust for millennials so I was trying to find the question, but yeah, how do you build trust for millennials in other kinds of investments? Was that correct?
Yes, that's correct. Like investments like crypto, commodities, etc.
Again, so we find that like with crypto, I think trust, millennials are probably more trusting when thinking about for crypto investors than, other generations of investors. Generally, what we found with Bamboo and our learnings from the US stock market is that information is the most important thing. And I don't think this is actually just a millennial specific problem. I think this is just a human problem. If someone is asking you if you're parting with your money in the hopes that you'll make money, you want as much information as possible to get you comfortable with the fact that you're actually going to make money, or that and the best way that is giving people information. So it could be educating them around the assets class. It could also just be giving them practical examples of how other people have made money, or practical example of how to make money. So something we do, for example, is even stuff that feels very, very obvious to you as the broker or as someone who is very cognizant of financial markets, is understanding that the vast majority of people are not very comfortable and don't fully understand even things that you think are obvious. So like how dividend payouts work, why price appreciation matters, all the little things. So it's breaking things down in a way that is as simple for people to understand as possible, and giving them as much information as possible on how to grow their wealth. And I think it goes back to what I said earlier around like millennial investors are the same as every other investor. They're investing to make money. So if you get people as comfortable with the fact that they'll make money, then they will be comfortable in whatever it is that you're speaking to them about.
Okay, thank you. So there are follow-up questions to the second question I asked. About 2 follow-up questions. The first one is, does every investment come with dividend? And then the second is, what can we do when we invest in a stock that keeps dropping?
The first question is no. So it depends on what companies you invest in, that whether or not they give dividends. Typically, bigger, larger, more established companies that are quote and unquote not that focused on growing are companies that give dividends. Although they're a lot, various companies give different amounts of dividends. So no, not every company gives dividends. But if you're on Bamboo, for example, we have a category on the app that is dividend paying stock. So if you go on that category on the app, every single company there gives dividends. So I think stuff like that again goes back to my point around just making stuff easier for investors to understand and get onboarded. And generally, what do you do if you're invested in a stock that keeps dropping? It's really up to you. If you believe, so generally I recommend knowing why you've invested in something. That's why it's not great to invest based on fad. So it's always good to do your research, know why you've invested, as opposed to just following the crowd. Because if you know why you've invested and the stock keeps dropping, then you're able to look at your investment less emotionally, and ask yourself what is going on that has made it drop. If it's something you think is going to be reversed, then you hold. And sometimes if you actually believe a lot in the company, that's the perfect time for you to buy more, because it's quote and unquote cheap. However, if you see that it's dropping because of a systemic reason, or you don't think that there's hope that it's going to go back up, or it's going totally against your investment thesis, then that's probably a good time to sell. Like the saying goes, are you buying the dip, or are you catching a falling knife? So it's something to always think about. But I think if you know why you bought something, then you can critically assess that. But I'm sure there are a lot of stockbrokers here that can also give us more, more advice. So happy to also hear what you go through.
All right, thank you so much for your responses. So the next question would go to Mr. David. It's from an anonymous attendee. It says, how does cloud work in Nigeria? That's just the question. How does cloud work in Nigeria? You, David?
Okay, so cloud works exactly the same. All right. So cloud works exactly the same as are you using, and which region is it domiciled? Currently in Nigeria, you would find out. Sorry, can you hear me now? Currently in Nigeria, you find out that because of NGDPR, quite a number of. Loretta, can you hear me clearly?
Recording in progress.
Okay. Yeah. So you find out that cloud works exactly the same way it works everywhere in the world. The only difference is the geography in which the data center is located. As the saying goes, cloud is just somebody else's data center. But what you find out in Nigeria is that because we have the NDPR regulation that closely resembles GDPR, you find out that quite a number of the cloud hosting in our environment is domiciled in Western Europe. But with the investments coming in now, especially around the infrastructure for data center in Nigeria, it's expected that that would change very soon, and that would also support the regulations that are being pushed to allow the traditional financial sectors to start to host in the cloud, which they are currently can't because of some regulations. So cloud works in Nigeria just everywhere. The only difference is just that the host country usually is not Africa currently.
All right, thank you very much. This question will be directed at both guests. It says, with the new Finance Act, subject to certain conditions, sales of shares in the Nigerian stock market will now attract capital gains tax. But the mechanism for the CGT looks unclear. Is that the same in other climes, say in the US? So who would like to go first? Maybe I'll direct it to Mr. David first, since you just finished answering. Yeah.
Okay. Yeah, thank you very much. So for other clients, I'm currently not an expert in that. But like with every capital gain or profiting in business, it is technically civic responsibility to give a part back to the common purse for the development of the whole. So I think it's a welcome development. I think that the way to look at it is once we start to see the developmental gain that is possible through this aggregation of government in a service economy is driven mostly by crowdfunding, for lack of a better word. So once you start to see the capital gain from those things, I think people will start to appreciate that whatever the endeavors you do, whether it's white collar or blue collar, and because there's a lot of stimulation into the non-white collar roles, it is also very important that when your money starts to work for you, then the money should also start to give back to the coffers. Thank you.
So yes, exactly. I agree with what he just said. Capital gains tax is the norm in most places. However, in the US, foreign investors do not have to pay. There's no capital gains for foreign investors. So if you're a foreign investor, if you're a Nigerian investing on Bamboo in the US stock market, you will not have to pay capital gains tax. But again, obviously, if you're filing your taxes in Nigeria, etc., I'm not sure how that will work.
Okay, thank you for your answers. I have a couple questions here from anonymous attendees as well. I'll just go into that. How can
We lost Loretta for a while.
Apologies, I got bumped off the call. I'm not sure my last question was heard correctly. Please confirm that.
I think you have to repeat it, Loretta.
Right then. So it says, how can fintechs? 1 second, I'm trying to find the question. Okay.
Yeah.
Few seconds while I look for the question. Yeah, it says, how can fintechs collaborate with NGX in the capital markets?
My question with that.
Okay. So there's a lot of room for collaboration. Can I go ahead, Loretta?
Yes, please.
Okay, so there are a lot of rooms for collaboration. First is the open API approach. Second is also to ensure that participants help drive what you would call RegTech. And basically what that simply means in simple terms is providing the technology that allows transparency into your business to allow the regulators do their jobs easier. What we'd call most times regulatory blockers are mainly because the regulators are there to protect the market, to protect the investors in the market. And sometimes those laws are seen as inhibitions. So if you're able to work together collaboratively to be able to provide technology that allows those transparency in what is happening within the fintech, then adoption or the regulatory blockers, so to speak, will be impediments that will be removed. So with open APIs and collaboration to help drive regulatory technology, then I think that would drive things.
All right, thank you. Thank you very much for your response. Just to confirm that Yamo had responded to that question, or would I have to repeat it? Hello, Yamo.
I think she popped out. You might need to repeat the question.
Yeah, I think I missed.
Okay, so I'm going to repeat the question. It says, how can fintechs collaborate with NGX to make service delivery better in the capital market?
I think I know David spoke about open API. I think that's also something that's very, very important. I think also there's some ways to leverage all the users that we currently have, users that are already showing active investment in the market, to help give them access to, like I mentioned, access to information, help build narratives, help, to put it plainly, ginger energy and efforts for investing. So I think there's the tech side, which is just giving access to technology, access to technology, access software development. But there's also the other side, which is the excitement part of it, getting people interested, the education part of it, and an easy way to also share and disperse information. It's also something else we should be thinking about.
Okay, thank you for your responses. We have one final question, which will be directed at both guests again. This question says, with the exchange and capital markets at large facing competition from the sporting bet industry in terms of retail involvement, what strategies are going to be deployed to win the hearts of the fast-paced instant generation? So, Mr. David, will you go first?
Okay, that's fine. Okay, yeah, I think this first drives back to, it's a very interesting question, and it drives back to the issue of the product and knowing the customer, like I mentioned earlier. For the betting industry, it is highly regulated.
and should be, especially because it's addictive. The rewards come instant. You get that instant dopamine in your system, and it can be very destructive. So while it needs to be further regulated and probably taxed a bit more, especially because of the damages that probably come from it. While I'm not trying to be antagonistic, but we've seen quite a number of injurious cases where there's a lot of suicide and people losing their wealth and things like that. So I think there needs to be a bit more education in those type of investments, the quick get-rich schemes that is expected by the addictive nature of gambling, and putting some money aside for the sufferers for mental health and dealing with those things. But the technology response would be those things that I explained earlier, where you have AI-based intelligence giving you advisory on your investments, highlighting the risk, the propensity for failure or losing of your wealth if you do this quick way to get rich things. So it's a two-pronged approach. There's a technology approach where the risk, the fatality in what you are getting into is there staring you in the face. And the other bit is where the regulators come in to ensure that we protect each other from the risk or the addictive nature that comes from the betting industry. Thank you.
Yes, I think to piggyback off a lot of what you've just said, I think education is a big thing, because I would hope that no one thinks investing in the capital markets in the same type of way as they think about gambling fundamentally. I think if that's the case, if that seems to be a prevailing thought, then there's lots of education around what investing is. Investing in the stock market shouldn't feel like gambling. You should be trying to make smart investment decisions, investing in companies that you think are going to grow, have long-term growth. Gambling would be more like just throwing your money in the middle of stock exchange and whichever company picks, hoping for the best. So I think there's just a lot of education that we need to do for, millennials and younger generation, and a generation of people that are not used to investing, to get them to really, really understand that investing in stock markets, even trading, if you're a more active trader in the stock market, isn't gambling, isn't like putting your money, and also helping people understand what are the ways to actually, identify good companies, what are the things that go into investing, what are the things to think about when, picking companies and looking at companies. But I think on the flip side, there's also the understanding that people are trying to make money. So yes, while it's true that there's been a prevalence of this get quick rich schemes and different types of betting, if we can show people that there are ways to make money in a safer way in the capital markets, then more people will also be interested, because like we all know, in all these schemes, there are countless people who have lost tons of money, and no one actually wants to lose money. So there is almost a desperation that's making people so eager to try and make money quickly. So it's really up to those of us who understand financial markets and understand to try and educate people around the risks and returns that are possible, and also do a better job of highlighting when companies are making, companies with really high dividend yields, companies where the stock price is climbing, do a better job of highlighting and making it clear to people that you can make a lot of money safely in the capital markets.
Okay. Thank you very much for your responses. They're very, very enlightening and insightful. But because we're pressed for time, we can't take any further questions. We're already running out of time. but we really appreciate the time you've spent to explain and answer all the questions. To Ms. Yamo Omorigbe, thank you so much for your presentation and for participating in the Q&A session. Thank you very much. And to Mr. David Ogunsola, thank you so much. Mr. David Ogunsola is the Chief Technology Officer, Africa Prudential PLC. Thank you so much for joining us for this session, for this retail investor webinar. And we hope to have more like this to increase education in the capital markets, as you have, that's a solution you've been proffering throughout the session. So while we are pressed for time, I would invite Mr. Friday Okwori for the vote of thanks. Over to you, Mr. Friday. Thank you.
Good afternoon, everyone. At Nigerian Exchange Limited, we are saddled with the responsibility of providing investors with adequate knowledge of the capital markets and its various available products to enable them make sound investment decisions. I'm delighted that today's webinar on digitalization, as it pertains to retail investors in the capital market, has been made possible. Financial literacy events like this one and several others in the past have been successful because of the huge roles various stakeholders have effectively played. Let me begin by thanking all our speakers for their insightful and engaging contributions and for providing answers to all the engaging questions. Our profound gratitude also goes to Africa Prudential PLC and Bamboo Invest for collaborating with us on this webinar and doing great justice to the discussions. We sincerely appreciate your efforts alongside Nigerian Exchange Limited to promote financial literacy as a means of achieving economic development. I would also like to thank my boss, the Divisional Head, Capital Markets Division, Mr. Jude Chemeka, for the opportunity to organize this webinar, and for my colleagues in the IT and Corporate Comms Department for their unwavering efforts in making this webinar a success. Finally, I'd like to thank you all, the attendees, for taking out time to join this webinar. For all the questions that were unable to be answered for want of time, we will surely respond via email. Thank you all. Thank you for your participation. And with this, we have come to the end of this webinar. Thank you.